We have the monthly chart on the S&P 500. We're extremely overbought. Once again, it happens in late cycles of a movement with a remaining limited amount of trading days for calendar 2019. There will be profit taking next week. Next week is also a triple witch expiration. So the volatility will be higher next week. And that means that prices on an intraday level from a price volatility level is we're going to see the increases that will give a bigger and broader volatility ranges in the key indexes at this moment in time. You also can relate it to seasonality as well if you'd like. People do that. Right now we're extremely overbought. We're going into January 2020. That's a different day. That's a different subject. But I will tell you, the risks remain high with the Chinese volatility and the futures market. Every time there was an announcement by Trump or, oh, a deal, this or that, a deal, the volatility was higher, which drove the S&P to even a higher monthly overbought level. And so you can stay overbought for a while. We've always talked about that. That is part of a late cycle momentum trade that has happened in 2019. 2020 will not even be close to that. It'll be totally different. So once again, we're just giving a warning out, is there could be a lot of profit taking now. So be aware of next week volatility when you're at the highs. And yes, you can even go a little bit
Market
higher,
data connection lost.
but then the market would not keep moving
Market
itself.
data connection re-established.
The bottom right here, you can see that that's a 4-month breakout, including this month right here. So basically, as we pushed it up here and keep pushing it up here, then the price cycle is getting exhausted in price in the overall S&P 500. And there is going to be a pullback. We'll probably stay range bound, but with the triple witch next week, once again, going into an overbought level, is that the volatility could pick up widely, wider, bigger. So be aware of the monthly reading going into January of 2020.